Alright, and good afternoon everyone and welcome back. My name is Sourabh Mutha and we're looking at the CA Inter Fast Track course. Guys, for May and November 2022, this course is going to be really helpful. What am I bringing to the table? We are revising GST. We've already done all of that. And now we're at direct taxes. Today is the 6th day of overall fast track course. Good afternoon. And for DT, it's the 3rd day only. So we have full 4 days today and 3 more days waiting for us to make sure that we do really well in our tax exams. Guys, what is needed in tax? If you know the sections, are you prepared for the exam? No. If you know the concepts, are you prepared for the exam? No. If you know examination question writing skills, examination question understanding skills, only then you are really prepared for the exam, because no matter how many sections, guys, PGBP roughly has about 30 sections, subsections, clauses, etc. You by heart all 30 and only 2 will be useful in the exam, but unless you know how to apply the sections, the concepts, etc., you will not do really well in the exam. So my agenda for all of us here is to really do well on the concepts, but even more on the sums. And that's the reason today we will wrap up the concepts for a lot of chapters. And again on the 18th when I meet you, about first half we will wrap up the concepts and then we will only focus on back-to-back questions. Which questions? ICAI questions. We are anyways looking at the module questions. Every chapter ends with module questions. We are anyways going to be looking at the MCQ booklet and we are going to look at whatever more we can lay our hands on. So that's the agenda for today's session as well. I'm taking it from a different city. I've traveled and I've come to Bangalore. A couple of y'all already we follow each other on Instagram, so I don't know if you've seen my stories, but I'm in a different city. I'm always very happy to come to Bangalore. It's a city that I love for the food, for the coffee and for the people. So I'm here and hope you guys are very well wherever you guys are, and let's do this. We have come to a very good stage in direct taxes and now we are working on it and getting better. Guys, in direct taxes, the exam, there is a 14-mark first question, which is basically a computation of income section. Is computation of income different? No, it's only the 5 heads plus everything else put together is computation of income. Next, there is one 5 to 7 to 8 mark question, compulsory on TDS. Yes, compulsory on TDS. Yes. So that's approximately 20 marks of your paper. Just 1 second. That's approximately 20 marks of your paper. Next, there is about 5 to 7 marks again, which is a set of question, which is definitely there in your exam. So that's another 27 marks. And remember guys, out of 60 marks, anyways, 18 marks are MCQs. So you're anyways looking at just about 42 marks. And out of 42 marks, your computation of income, your TDS and your set of chapter will almost get you 25 to 27 marks. So the remaining, there will be a capital gain sum maybe, there might be a salary sum maybe, there might be a residential sum maybe, there might be a return of income, and that is the rest of your paper. So that's how your paper spans out. And what we are going to do in this session today, we've already finished a lot of chapters. Let's just recap what all chapters we finished. We finished the chapter introduction. We also finished the chapter called residential status and scope of income, which also had a concept of deemed income, ISSD, IRF gifts. We did exempt income, which also specifically tailored to agriculture income. We've done a lot of rates of tax. We've not finished it, but we've done good progress on rates of tax chapter. We've done a chapter called income from house property. We've done a chapter called IFOS. We've done a chapter which is huge called PGBP. And we've also done a chapter called set off and carry forward. We are currently at a chapter called capital gain. So that is what the chapter list looks like. And today's session is going to be working on capital gain. We will finish capital gain and we will move ahead to sums on capital gain. So today's session is going to be about capital gain. Just 1 second. Today's session is going to be about capital gain. So we will work on capital gains, including module questions. Yes, all the questions we will cover. Then we will look at a chapter called clubbing of income, which again is very useful at CA Inter level. And once we are finished with that, we will enter into the world of deductions. There is no hurry at all. This is the agenda. We have the whole day. And if we finish deductions, we might enter into the world of TDS. We'll see how that goes. But right now, my focus is on a chapter called capital gain. Here we go. Let's do this. We are at capital gain. I'm just going to upload the QuickBook very quickly so that we can go through the QuickBook also directly. Here it is. Here is the QuickBook, and in QuickBook we are looking at a chapter called capital gain. Just 1 second, guys. Alright, guys, in capital gain we've already made some good progress. We did how to compute ATSCP, which is essentially what you will require when we start looking at questions, including the exam questions. You will see that knowing that it is an asset, knowing that there is a transfer, knowing that there is a sale consideration, knowing that there is a cost, and knowing the period of holding, whether cost should be indexed or not, you will more or less get your answer on capital gain here. Yesterday we had done all the discussions here and we were at a very good position. We had just done section 50B last, and now I'm going to go ahead and discuss one more small section ahead, which is section 51. Not very important right now, but we will still discuss it. What is section 51? Guys, everyone, let's pay attention. What is section 51? Section 51 is a very auspicious amount. So that's how I remember this section, and the shortcut is an auspicious amount. Whenever you give a token or an advance, let's say you want like a house and you want to buy that house, so you will give a token of 51,000 rupees as an advance that I'm going to buy this house. But if you don't land up buying the house, don't land up paying the money, etc., then that amount gets forfeited by the owner. So this is called forfeiture. Guys, we've also done forfeiture in IFOS. So post 1st of April 2014 on or after that, any forfeiture is straight taken away and taxed under IFOS because you've earned income, guys. That 51,000 is the owner's income, so it is straight taxed to IFOS. But before 1/4/2001, the situation was different. That 51,000 would be taxed, but in an indirect way. They would tax it by reducing the cost. So in ATSCP, you are basically selling an asset, and let's say your asset cost is 20,51,000. You bought the asset, a house, for 20,51,000. You will minus this 51,000 or forfeiture. Why? Because this is your income and they want to tax you indirectly. So they will basically reduce your cost, yes, and when the cost is reduced, the gain will be increased. So section 51 is not important because it's a very old section, but before 1/4/2001, any forfeiture will be minused, yes, from the cost, yes, from the cost. And what if the cost has to be indexed? Will I index first or will I reduce first? You will first reduce and then only you will do indexation. You will first deduct, only then you will do indexation, because the government doesn't want to index or inflate a bigger amount. Indexation, you know, is inflating. So hence they say that first you deduct 51,000 and the balance 50 lakh, only that you have to index. That is the concept of section 51. Very simple, very easy. Forfeiture before 1/4/2014 and honor after 2014. Now guys, we've come to a section which is very important, that is exemptions under capital gain. Now that you know you have capital gain, but who wants to pay tax, guys? No one wants to pay tax. So the government says that, listen, if you've sold an asset but your intention was not to make money, your intention was to buy another similar asset, then we will exempt your capital gain. This was the intention of the government, yes, and they introduced first 3 sections. These next 3 sections are only for individuals and HUFs. Yes, only for you and me, and for our HUFs, only for them we have this next three sections. The first section is section 54, the next section is 54B, and the next section is 54F. So the shortcut for me to remember for individuals and HUFs, it is 54B and F. That is a shortcut how I remember section 54B and F. Now let's tackle section 54 first. Very patiently guys, you will listen to me, very important section. Section 54 says that what are you selling? You're selling a residential house property. Yes, you're selling a residential house property. Can it be a plain piece of land? No, it cannot be a plain piece of land. And if you're selling a residential house property, let's say you're selling a flat for 1 crore rupees, which you had bought a while back, will you have capital gain? Yes. Do you want to pay tax on that capital gain? No. So what do? You go ahead and you buy a new residential house property. So this is one house for another house. Yes, one house for another house. In India, we do it very often when you want to move from a smaller house to a bigger house. Sometimes, you're moving to a different city, so you sell one house and buy another house. So the new house property you have to buy from that old house property. You have to sell one house and buy another house. This is section 54. Watch out guys for the details. First, it's applicable only to individuals and HUFs. Alright. Next, the asset should be a long-term capital asset. That means the gain should be long-term capital gain. Example, for house property, how many months do you need to hold it for making it long-term? Guys, please tell me, for a house property, how many months do you need it? You need to hold it for more than 2 years or 24 months. Excellent ratio. So it should be a long-term capital gain. Yes. And let's say my long-term capital gain is, let's do one calculation. Let's say I sold, my sale consideration was 1.5 crores. My expenses on transfer were 5 lakh. I had to pay brokerage of 5 lakhs. So my net amount was 1 crore. That is the net sale consideration. And this net sale consideration, I have, let's say, an indexed cost of acquisition of 20 lakhs. So my long-term capital gain is 80 lakhs. Yes, that is my long-term capital gain. This long-term capital gain I have to buy a new house with. Yes, if you want that 80 lakhs to be exempt, then you need to invest that 80 lakhs ahead in a new house property. Yes. And guys, if your gain is up to 2 crores, you can even buy 2 house properties, or you can construct one and buy one. Basically, this benefit is available even to buy 2 house properties, provided your long-term capital gain is up to 2 crores. Alright, so now details about the, first you have to calculate this long-term capital gain, and now you are calculating the exemption. The exemption is given only if you buy the house, but how long do you need to buy? From the date of transfer, you have to buy within 2 years. Can I buy before? Yes, you can buy before also 1 year. So you have to buy before 1 year or within 2 years. This is from the date of transfer. But what if I want to construct a house? You can construct also from the date of transfer. You have 3 years to construct the house property. 3 years to complete the construction. Yes. Can I buy this new house and do I have to keep it? Yes, you have to keep it. It has to be locked in. Locked in basically means you cannot sell it, or if you sell it, there are some repercussions. You have to stick to the house for 3 years. So basically you have to hold the new asset for 3 years from the date of acquisition of that new asset. If you sell it, is it a crime? Will they put behind bars? No guys, it's not a crime. If you sell it, then what they will do is whatever capital gain you were exempted earlier, that they will reduce from your cost. Let's take an example. This 80 lakh was exempted because you invested and you bought a new house for 1 crore rupees. So this new house is for 1 crore rupees. And now someone gave you an offer for 1.3 crores in 1 year only. Can you sell it? Yes, you can sell it. Your sale consideration will be 1.3 crores, but your cost will be 1 crore. No, it will be 1 crore minus 80 lakhs. So it's not a crime to sell this new house. You can sell it, no problem, but the cost will be reduced by the gain that is exempted earlier. So cost will be reduced. Yes. Next, do I have to buy or construct immediately? No guys, the government has given you 2 years or 3 years to buy, construct, etc. So till that time, can I gamble on the stock market or can I buy cryptocurrencies? No, you need to invest in a capital gain account scheme. This is called a capital gain account. A capital gain account is nothing, it's just like a bank account. You put money in a bank account, same way you put money in a capital gain account. Alright, just 1 second. Perfect. So this is what it is. The new house property has to be bought or constructed, held for 3 years, otherwise the cost will be reduced. Capital gain accounts you have to invest, but when do you have to put the money in capital gain account? By the return filing due date. Whenever you file your return, by then you have to put the money in that account. And that's about it. Yes, that's about it. So you will get an exemption. Exemption will be under section 54. Are you happy? Yes. And now can you buy even 2 houses? Yes. But guys, the houses should be in India. Both the houses should be in India. If you're buying one, that one or both should be in India. Guys, this is section 54. Exemption in case of house property for house property given to individuals and HUFs only. Asset value to be long-term capital asset. First calculate long-term capital gain. The above long-term capital gain will be exempted if one house is constructed within 3 years or purchased 1 year before or maximum 2 years later. This period is to be deposited in the capital gain account scheme by the return filing date. Guys, I hope it's okay. Is the lag gone? Let me know. There is some internet issue sometimes, guys. Okay. Amount to be invested in is the long-term capital gain. The new asset is to be held for 3 years. If sold earlier, the cost will be reduced. This is something that we will do some sums on. 54 is an important section. Yes. Next, guys, is 54F. 54F is basically something similar but different also. I'll tell you first what is the difference. You're not selling a residential house this time. You're selling your family's assets. That's how I remember F. F is for family's assets. Yes. What do you mean by family's assets? You can be selling gold, you can be selling shares, you can be even selling land, anything but a house property. Yes, you're selling anything but a house property you've sold. And you should have long-term capital gain. Guys, these are benefits, these are exemptions given only for long-term. Yes, most of them are only for long-term. So again, you sold the house for 1 crore 5. You had 5 lakhs of brokerage. So your net sale consideration was 1 crore. Your long-term capital gain was 80 lakh. So do you want exemption on that 80 lakh? Yes, you want exemption on that 80 lakhs. Now you need to buy a house, but here guys, this also is buying a residential house property. So you're selling one family's assets, any family's assets, and you're buying a house property. Both are similar because both involve buying a house property, but there you were selling a house property, here you're selling any other asset. Guys, in India it is very common. Sometimes we buy a lot of gold but we don't have a house. So sell the gold, whatever gain you make, don't worry, it will be exempted if you buy a new house. Again, guys, what is the difference here? Here you don't have to invest 80 lakhs. The government is expecting you to invest more. So here you have to invest the net sale consideration. Example, net sale consideration is 1 crore. Here they are expecting you to invest slightly more. In section 54, you had to invest 80 lakhs. Here they are asking you to invest a little more. So remember 54F as an exception. What are they asking you to invest? They are asking you to invest the net sale consideration. Alright. What if I invest the entire thing? Good. If you do your entire job, they will also exempt the entire 80 lakhs. But what if I invest out of 1 crore, I only do 75 lakh of investment? Though then you've done your job 75%, they will also do their job 75%. So 80 lakh into 75% only will be exempted. I repeat, you have a gain of 80 lakh, you don't want to pay tax on it, you want an exemption, okay. So you need to invest money ahead, net sale consideration you have to invest. What is the net sale consideration? Example, 1 crore. If you only invest 75 lakh, that means how much work you've done. Let's take a easier number. What if you invest 80%? That is 80 lakhs. So you've done 80% of your work. So they will also give you exemption of only 80%, that is 64 lakhs. The rest you have to pay tax on? Yes, the rest you have to pay tax on. Guys, that is your long-term capital gain exemption under section 54F. The same things, guys, you have to buy within certain periods, which is the same. You need to construct within certain periods, which is the same. You need to hold on for certain periods, which is all the same. If you sell it within 3 years, your cost will be reduced. So this is all the same. Yes, Capital gain account scheme will still apply here also. Yes, it will apply here as well. So this is the concept. Yes, this is the concept. All right. Now this is section 54F. That was section 54. Now we are going to the next one. I'm just trying to figure some space for the next one. The next one is also for individual HUF. It's very simple. Guys, section 54B, the shortcut is barren land. Your agriculture land, that's only a shortcut to remember. Your agriculture land, if you're selling, I tell B is barren because it becomes barren, but you can sell it for any other reasons also. So this is sale of agriculture land. Yes. Guys, rural agriculture land, as you know, if you sell, there is no capital gain. So we are not worried about that. It is urban agriculture land you are selling. Yes, if it's urban agriculture land that you sell, it can be long term, short term, doesn't matter because it's agriculture. Government loves agriculture. Then whatever is your gain, you can exempt it under 54B, provided you buy a new agri land. Within period is 2 years, so you need to invest it within 2 years. Yes. Then you need to hold it for 3 years, same thing. If you sell it within 3 years, your cost will be reduced, same thing. Till 2 years, you need to invest in capital gain account scheme. Yes, same thing. So more or less this is similar. Yes, but the asset changes. Here you are selling an agriculture land and buying another agriculture land. Here the land you are selling is urban agriculture land, because rural agriculture land, if you sell, it's in rural areas, right? It's not taxable only. Long term, short term, both it can be, and you're buying a new agriculture land within 2 years. Guys, this is section 54B. Again, applies only to individuals and only to HUFs. Now going to the sections which apply to everyone. Guys, there are 2 sections which apply to everyone. So these 2 sections apply to everyone. Yes, apply to everyone. The first one is you have an industrial land and the government wants to make a metro over that land. So they compulsory acquire that land. They demand that land. So that is section 54D. D for demand. They demand that land from you. Section 54D is demand. That's how you remember this section. So what is it? It's an industrial land and building. Because they can demand it whenever they want, so it can be long term as well as short term. Yes, for 54B and 54D are exceptions. They can be long term as well as short term. How do you remember? Agriculture the government likes, and they can anytime compulsory acquire it, so they can demand it anytime. So long term or short term both. And here guys, you need to invest. Everywhere you need to invest the capital gain. Only at one place, that is 54F, you need to invest net sale consideration. Here again, what do you need to buy? You need to buy another industrial land and building. Obviously, you need to buy it within 3 years. Next, same, you need to hold it for 3 years. If you sell it, the cost will be reduced. Capital gain account scheme, everything else is the same. Yes, everything else is the same. This is section 54D. Guys, the philosophy is the same. They are your gain. You don't want to pay tax, no problem. You have these exemptions. So 54B and F was only for individual HUF. This one is for everyone. And now one of the most important ones. Guys, sometimes it's not possible for you to sell a house and make a gain of 80 lakh and buy a house again for 80 lakhs or more only. What if you like a house which is for 70 lakhs? You have 80 lakhs of gain which you want to exempt, but the new house that you like is only worth 70 lakh. Then I don't want to pay tax on the balance 10 lakh. So what do? The government says, don't worry, we'll make your capital gains easy. So this is section 54EF, EC, ease of capital gains. The shortcut is easy capital gains or ease of capital gains. This section says that you can be selling any residential house property, including land. Sorry, not residential house property, any house property including land. You can be selling any house property including a plain piece of land also, but it should be long term. Yes, everything is long term except 54B and 54D. This should be long term. And don't worry, if you don't have anything else to buy, you can just buy some government bonds. The bonds are which kind of bonds? National Highway Authority of India bonds, Rural Electrification Corporation bonds or any other specified bonds. So bonds means who gets the money? The government gets the money. The government says, if you give me the bonds, if you buy from me bonds, that means you give me money, I will exempt this. Yes, exempt this. Guys, here the details are different. You need to buy the bonds within 6 months, not 2 years, not 3 years, just within 6 months, because just like buying and demat shares, it's very easy. So you need to buy it within 6 months. You need to hold it for 5 years. Yes guys, not 3 years but 5 years, and you can't sell it, neither can you mortgage it, you can't even pledge it, you can't give it and take money against it. No, you can't do any of this, and if you do, you will be taxed on whatever gain was exempted earlier. And guys, till now, whether it was 54B, F, D, we did not have any limit, but here there is a limit. The limit is basically 50 lakhs for all the long-term capital gain in 1 year. So if in 1 year, guys, this year 21-22, you've sold a house and you have long-term capital gain of 55 lakhs, can I invest 55 lakhs in 54 EC bonds? No, I can't invest 55 lakhs. I can only maximum invest 50 lakhs in this bonds. So remember guys, the maximum is 50 lakhs. I'll give you a slightly trick question. You answer it whether you can do it or not. Guys, 55 lakhs is this year 21-22, and it happened on March 3rd today. Can I invest 50 lakhs this year, as in till 31st March, and can I invest 5 lakhs next year? Can I do it, split it up? No. The government says you have 6 months to invest, but you are investing only this 50 lakhs. So you can invest it now till 31st March or till 6 months, whenever 6 months ends, but for 1 year. That means what is the shortcut? The shortcut is for 1 year, you have to aggregate the long-term capital gain, and that should be maximum 50 lakhs that you can invest ahead. What if my gain are 55 lakhs? Then can I buy bonds worth 50 lakhs? Yes, you can buy bonds worth 50 lakhs. You will get an exemption of 50 lakhs, but on 5 lakhs, you'll have to pay tax. Guys, this is an exemption. Just 1 second. Yes, within 50 lakhs within 50 lakhs within 6 months. I'll give you an example. You sold a house today, guys, 3rd of March, and you made a gain of 55 lakhs. Can you be smart and can you invest some 50 lakhs this year and 5 lakhs next year? Because you have to invest 50 lakhs every year. No, you can't do that. Because in 1 year the total was 55 lakh. So of that you can save only 50 lakh, but you can invest till 6 months. So from 3rd of March you have 6 months to invest. Guys, here it's different. You have to invest within 6 months, hold for 5 years, longer period. This is shorter period. And because guys, you need to invest so quickly, there is no capital gain account scheme here. There is no capital gain because there is no time for capital gain account scheme. So hence here, there is nothing like capital gain account scheme. Perfect. So these are your exemptions. I just want to add one small detail. Guys, in 54, when your house is being sold, it can also be compulsorily acquired. In 54F, when your family's assets are being sold, it can also be compulsorily acquired. So in all these things, there is a timeline to invest ahead. Example 54, you need to buy the house within 2 years or construct the house within 3 years. Same thing here also. Same thing in different sections also. But what if I have not sold this house? I have not sold the family asset, it's compulsorily acquired. Then the government said, then don't worry. There is a section called 54H which says that if it is compulsorily acquired, then this timeline of 2 years, this timeline of 3 years will start once you receive the money, yes, from the date of receipt. I'll repeat this section 54H. What is the shortcut? Hold on. What does the government say? There is a timer, guys. When I sell my house today, I have to invest in a new house within 2 years or 3 years. So there is a timer, yes. When does the timer start? Whenever there is a transfer. So today is the transfer from the today's date, it will start. But if today I have not transferred it myself, there is a compulsory acquisition, then in that case the timer will start from the date I get the receipt of the money from the government. That is section 54H. The section is hold on. I'm just recapping all the exemptions on capital gain, guys. Quickly, let's recap all the exemptions of capital gain. Guys, which ones are for individuals and HUF? 54, 54B and 54F. And which ones are for everyone? 54D demand and 54EC ease of capital gain for everyone. Long-term capital gain, long-term capital gain, long-term capital gain. but this one, short term or long term also okay, short term or long term also okay. You need to buy a house for a house, you need to buy family assets for a house, you need to buy bonds here, you need to buy industrial land and building here, you need to buy an agricultural land here. Guys, in all of them capital gain account scheme applies except this last one. In all of that, there is no limit to how much you can save, except this last one, you can save only 55 lakhs. In all of them, the hold on period is only 3 years, except this one, which is 5 years. In all of them, there is investment period of 2 years, 3 years, but here it is only and only 6 months. So 54EC more of is an exception, but guys, 54EC is something that you do with other sections. Example, 54F and 54EC you can do together. I can sell one house, I can have gains of 75 lakhs. Out of that, I can buy a new house worth 25 lakh and I can invest in bonds worth 50 lakhs. Guys, this is a very, very important concept that we just understood. Now, over to the next slide, the last part of capital gain before we go to the questions. Just one second. Just one second, guys, there's some network issue. All right, now guys, the last bit is the tax rates. But what are the tax rates? We've not seen special rates of tax anywhere. House property was taxed at normal rates. That means if you're an individual, then slab rate. If you're a partnership firm, then those rates. Same with PGBP and same with IFOS. So nowhere did we see any special rates. But capital gain, guys, has some special rates. So let's see what are those rates. First, the assets are normal assets. So first, let's see for normal assets. What are normal assets? Your house, my house, your office, my office, your gold, my gold. All these are normal assets. When you sell normal assets and you make any short-term capital gain, the government says we don't want to give you any benefit. No. So normal rates, yes. So example, if I buy gold today and I sell it tomorrow and I have a gain of 10 lakh rupees, how will I be taxed? Normal, up to 2.5 lakh rupees basic exemption limit and then 5%, 20%, assuming I have no other incomes. But what if I make long-term capital gain? That same gold I buy today and I sell it after 10 years, then the government gets very happy because I've held it for really long. So they say first we will give you indexation. Guys, I hope you know indexation. You remember indexation. Indexation is for all long-term capital assets except listed UU, except bonds and debentures, and except slum sale. So first the government gives you indexation and then they say that we will tax you only at a flat rate. So indexation means your cost goes up, so your gain anyways goes low, and that low gain we will tax it at a flat rate of 20% under a section called section 112. But can I use my basic exemption limit against this at least? Yes, you can. So what if my long-term capital gain is 10 lakh rupees? Then up to 2.5 lakh rupees, nothing. And from 2.5 to 10 on that 7.5 lakh, I have to pay flat 20%. Yes, guys, if you remember on lotteries, how much do you pay? 30%. Same way here you play flat 20%. Think about it. This is also like a lottery, 20%. And next is listed UU. I told you this definition of listed UU is very important. I'll repeat what is listed UU. Listed UU means listed equity shares, listed units of equity oriented mutual fund, and listed units of a business trust. The last one is not for your exam right now. First and second only, listed equity shares like Reliance shares and listed units of equity oriented mutual fund. Now here guys, this is basically listed securities. Yes. So the time to buy this, whenever you want to buy shares guys, do you know what time is the most auspicious time to buy shares? The most auspicious time to buy shares is in the morning at 10:15. Why at 10:15? Because the rates are 10% and 15% on listed UU. That's the shortcut guys. The most auspicious time to buy listed UU is 10:15 because 10% and 15%. How do you know which one is for which? The bigger one, that is 15%, is for short term capital gain because the government doesn't like short term, and hence 15%. And this is a section called 111A. Can I use my basic exemption limit? Yes. And this 10% is a very small rate, so hence the government likes long term capital gain, gives only 10%, and this is under section 112A. Can I use my basic exemption limit? Yes. And this 10% is that too after on above 1 lakh. Yes, only above 1 lakh. That means, what if my listed UU, I buy Reliance shares and I sell Reliance shares and I make a profit of 1,40,000. On 1 lakh there will be no tax, only on 40,000 there will be 10%. So this is a benefit. Yes, this is a great benefit. So let's recap what are the rates. Guys, remember rates are normal rates and 20%. And whenever it's listed UU, only when it's listed UU, then you will remember 10, 15, 10 for long term, 15 for short term. It's long, so bigger number 112A. It's short, so shorter number 111A. Both you can use the basic exemption limit. Yes, and this is only above 1 lakh. Yes. Income will be 1,40,000. Your income guys will be 1,40,000. So 1,40,000 will come in your GTI, in your TI. Yes, but what will be taxable is only 40,000. I hope that is clear. Guys, now there is a cake which you want to eat, I also want to eat it, and your brother also wants to eat it, and my sister also wants to eat it. There are 4 people who want to eat the cake. Who gets to eat the cake first? Why am I talking about it? Is because there is a basic exemption limit guys. This guy can also take it, this guy can also take it, this guy can also take it, and this guy can also take it. So all 4 can eat the cake. But who will eat the cake first is the question. So let's decide who will eat the cake first. So first, always the normal income will eat it. Example, if you have any house property income or PGBP income or IFOS income or salaries income, first that will be adjusted against the basic exemption limit. So let's take an example. You have salary income of 3 lakh rupees. Not 3 lakh, let's say you have salary income, or not salary, you have PGBP of, let's say, 1 lakh rupees. Next, you have long term capital gain normal assets of also 1 lakh rupees, 1,10,000 let's say. You have short term capital gain of listed UU 1,20,000. This is listed UU. And this is long term capital gain, again 1,30,000. I've increased the numbers by 10,000, and this is also listed UU. I've given you 4 incomes guys. Very good discussion here happening. You have 4 incomes. Can you have 4 incomes? Yes, you should have more than 4 incomes also in your life, no problem. So one is a business, one you have sold gold, so it's normal assets, one is short term, one is long term, listed UU. Let's put the rates. This is taxed at 20% flat. This is taxed at 15%, and this is taxed at 10%. Above 1 lakh it is taxed. So these are the 4 incomes. Now what is your basic exemption limit? Your basic exemption limit is 2,50,000. So first, who will use it? First, your normal assets will use it, that is PGBP. Yes, so 1 lakh will be used here. Yes, so how much basic exemption limit gone? 1 lakh of basic exemption limit gone. Next is 1,10,000. How much basic exemption limit you have now? You have only 1,50,000 unexhausted, so that you will use here. Now 1 lakh basic exemption limit gone, 1,10,000 also gone, that is 2,10,000 gone. How much remains? 40,000 remains. Now which one will you adjust it against? You will adjust it against 1,20,000. Why will you adjust it in this order? Because guys, these are higher rates of tax, minus them first. Why do you want to pay higher tax? So this will be 80,000, on which you will pay 15%. On this 1,30,000 which will go in your income, but you will pay tax only on 30,000 at the rate of 10%. So what have I done? I have just told you how to eat the cake. In the cake, first person who will eat it is normal incomes, then LTCG of normal assets 20%, and then STCG, LTCG 15 and 10. This is the order you will follow for optimum saving of tax. I hope this is understood. And guys, this is your capital gain chapter. Now, one second. I'm not going on mute. There's some problem with. Can you guys hear me now? Yeah, I think should be better now. All right. Perfect. Just uploading. Not audible. Okay. Guys, is it better now? Please let me know. Is it better, the audio? No? Okay. I'm just not audible. Okay. Guys, just checking the audio. 1 second. Can you hear me now? All right, looks like there is some issue. 1 second. Okay. All right, can you hear me now, guys? Please let me know if you all can hear me now. Okay, perfect. Finally, so here we go. I'm just going to upload the module. Here we go. This is the module which we're looking at now. Perfect. Guys, you will keep your calculator with you, around you. I don't seem to have a calculator. Let me just fetch my calculator also. Just 1 second. All right, guys, this is question number 1, Mr. Mithun. Mr. Mithun, guys, what I will do is I will give you all 2 minutes to read the sum first, to try it, and then we'll discuss it together. Over to you all. Let's not spoon feed ourselves. Let's first try and then let's discuss. You need to figure 5 things for me: A, T, SCP. And use this, guys, write this in your books, and whenever you get asset, tell me if it's normal asset or listed UU. See if you can find whether it's transfer, see you can find the sale price, cost, or period of holding. Alright. Please read, over to you all. Alright guys, slightly difficult question, so I'm going to be with you guys and do this with you. Mr. Mithun purchased 100 equity shares of a company called Good Money Company Limited on 1st of April 2005. He's paid STT. The moment someone has paid STT, I know it is listed UU, so I know the asset. Company allotted bonus shares in the ratio of 1:1 in 1st of April 21st of. Basically, they had 100 equity shares and then he got 100 bonus shares also. He sold all the shares on 1st October 2021, so there is a transfer also at the rate of 4,000 per share, so there is a sale consideration also. Cost also, guys, he had bought it for 1,000 rupees cost, and for the bonus shares the cost is 0. If it's before 1/4/2001 you can take the fair market value, but here you don't need to take the fair market value. And period of holding, guys, 2005 this is, and this is 1st of December 2020 bonus shares. So the original shares are long term and the bonus shares are short term, because 1st December 2020 to 1st October 2021, within 12 months. Guys, by the way, before we do this, I just want to explain a small concept to you guys. So I'm just going to explain that on a new sheet. I actually forgot to mention that, so let's discuss this. Guys, earlier your listed UU was exempt from tax. Let me show you how. If you buy your Reliance share, which is a listed UU, listed equity share, let's say for 100 rupees, and if it would go even up to 1000 rupees, this would be exempt earlier. This long term capital gain was exempt earlier. Then on the 31st of Jan 2018, Arun Jaitley came on air and he said in the budget that, listen, we can't give you exemption, so from now on we will tax it. Yes, this listed UU, whenever you sell it, we will tax it. Yes, the exemption was taken away. By the way, the exemption was in a section called 1038, which we haven't studied because it's not there for your exam. That exemption has been taken away. So now is it taxable? Yes, but that's not fair. It's almost like telling you that CA Inter will have 4 subjects, group 1, and 1 month before the exam they tell you that it will have 5 subjects. It is fair? No, it's not fair. So hence Arun Jaitley gave a very cool formula. He said, don't worry, I will save you from some tax. So on 31st Jan 2018, the price was 1000 rupees. You were expecting this 900 rupees to go without tax, being taxed. So he gave a very cool formula. He said first sell the share and then I'll tell you the formula. So let's sell the share. You finally sold the share for 1200 rupees. That is your sale price. Yes, your sale price is 1200. Your original cost was 100 rupees. You sold it for 1200. So Arun Jaitley gave a new cost. Yes, this is the new cost of acquisition, and I call it the Arun Jaitley's cost of acquisition, which is basically Arun Jaitley's cost is basically the old cost, which is 100, or a higher amount. So let me just explain slightly in terminology that we can use. This new cost of acquisition, or this cost of acquisition, will be either your old cost, which in our example is 100, or they will give us a new cost. What is this new cost? Whichever is higher, obviously, because cost higher is better for us. So what is this new cost? This new cost is the lower of the fair market value as on 31 Jan 2018 or the sale price. So what was the fair market value as on Arun Jaitley's speech date? It was 1000. What was the sale consideration? 1200, which is the lower one, 1000. That we will give you, or we will give you the old cost, whichever is higher. So I repeat, what is Arun Jaitley's cost formula? The old cost, we can definitely give you that cost because you paid that, or we will give you a higher cost, whichever is higher. Yes. And how will you get this new cost? The new cost is lower of, so there is higher also and there is lower also. Please remember, there is higher also and there is lower also. What is this lower? The lower is the FMV as on 31st Jan or the sale consideration 1000 or 1200. So lower of this, that is 1000. We'll apply this now on the next page immediately, guys. Here we go. Guys, have you bought these shares before Arun Jaitley's speech date? The original shares, have you bought it before Arun Jaitley's speech date 2005? Yes. And are you selling it after Arun Jaitley's speech date 2021? Yes. And are they long term? Yes. And are they listed UU? Yes. So can we use Arun Jaitley's cost? Yes. I repeat, when can you use the cost? When you bought the shares before Arun Jaitley's speech and you're selling it after Arun Jaitley's speech and it's long term, then can you use this cost formula? Yes. What is the cost formula? So the cost is the old cost, which is 1000, or the new cost. But what is this new cost? The new cost is the FMV as on Arun Jaitley's speech date, that is 2000 rupees. Here we go, this is the last line. Or the sale consideration 4000, whichever is lower. So 2000 is lower, so I'm putting 2000 here, and now 2000 and 1000, whichever is higher. So your new cost is 2000. Why have they done this? Because guys, the moment your new cost is 1000, when you're finally selling it for 1200 rupees, your new cost is 1000. So they're only taxing you on 200 rupees. That is, they're only taxing you after Arun Jaitley's speech, not before that. So I repeat, this is only when you're buying an asset along listed UU before Arun Jaitley's speech date, that is 31st Jan 2018, and selling it after that, and that is a long-term capital asset. Yes. In that case, can you use the new or the old? Yes. Whichever is higher. Yes. Alright. So let's solve this, guys. These are two different assets. Yes. So I'm doing two different calculations. Be with me. Let's do the calculations on this side. The first calculation is for original shares. I'm going to call them OG, original shares. How many original shares? You had 100 original shares. So this is 100 original shares. ATSCP. What is the sale consideration? 100 into 4000 rupees. That is 4 lakh. If you see here, there is 1% brokerage. So on 4 lakh, 1% is 4000 brokerage. Can I minus that? Yes, you can minus. So 3,96,000 is the net sale consideration. From that, can I minus the cost? Yes, but can I index it? No, this is listed UU. On listed UU, there is no indexation. So can I minus? What is my new cost, guys? My new cost is 2000 rupees. So 2000 into 100, that is 2 lakh rupees. So 1,96,000 is my long-term capital gain. Guys, please tell me, is this listed UU? Yes. So what rate will apply? 10% will apply. Above 1 lakh, yes. So only 96,000 will be taxed. Your entire 1 lakh 96 will go in your income, but tax will be only 96,000 at the rate of 10%. This is original shares. Now bonus shares. Are they an asset? Yes. Are they transferred? Yes. What is the sale consideration? The sale consideration is 100 shares into 4,000 again, which is 4 lakh. Are there some expenses on transfer? Yes. 1% brokerage. So 3 lakh 96 here also. Yes, here also. But here, is there any cost? The cost of bonus shares is 0. So you'll minus 0. So 3 lakh 96,000. And what is the period of holding? It is short term. Is this listed UU short term? Yes, it will be taxed at 15%. Yes. So here we go. 1 lakh 96,000 long term, 3 lakh 96,000 short term, and they have some dividend also which they've got. So here it is. He also received dividend of 10 rupees per share. So 10 rupees into 2000, sorry, 10 rupees into 200 shares, that is 2000 rupees. Here we go. So this is the answer. This is the total income. If you want to calculate tax, how will you calculate tax? He has a basic exemption limit of 2.5 lakh rupees. First, this dividend income will be adjusted. So out of 2.5 lakh, 2000 basic exemption limit used. Next, this 3 lakh 96, you will adjust it. So against the 3 lakh 96, the balance basic exemption limit will be adjusted 2 lakh 48. Which is 1 lakh 48, which will be at 15%, and on 1 lakh 96, only on 96,000 it will be at the rate of 10%. So this and this is your tax. On that there will be surcharge? No, because the income is not more than 5 lakh. On that there will be cess? Yes. So this is your answer. This is your question. This is the new cost of acquisition, Arun Jaitley's speech date. This is the next sum, guys. Very, very simple sum. Over to you all. First try and then we'll discuss. Over to you all, please. Alright, so let's do this, guys. This one is, let's do this. Arav converts his plot of land purchased in July 2003 for 80,000 into stock in trade. Guys, the moment I see convert, I know it's a transfer. So your asset is being converted into stock. So is this 80 SCP? Yes, this is 80 SCP, but it will be taxed only when the stock is finally sold, and this will be under section 45.2. 45.2 says that there will be two calculations. One is 80 SCP and one is PGBP. First, let's do 80 SCP. Is there an asset? Yes, there is a piece of land. Is there a transfer? Yes, you've converted it, so that is a transfer. Is there a sale consideration? No, you haven't sold it. So what will you take as the sale? You will take the FMV as the sale consideration. Is there a cost? Yes, 80,000. And when did you buy it? You bought it in the year, you bought this in July 2003. So very, very long term. Will you index the cost? Yes, you will index the cost. So I've got all the things needed to calculate capital gain. So what is my FMV as on the date of conversion? The FMV as on the date of conversion is 3 lakhs. What is my cost of acquisition? 80,000. I will index it. 80,000 divide by 109 into 301, which will basically be 22 lakh, sorry, 2 lakh 20,917. So 3 lakh minus 2 lakh 20,917, which will give you 79,083. This is your capital gain. Yes. Is it long term capital gain? Yes. It will be taxed at 20%. Yes. But guys, this will be taxed only in the year you sell it. So when have you finally sold this stock? This stock was sold in the month of Jan 22. So in the year 21-22, you will pay tax on this long term capital gain. And now PGBP. How much have you sold it for? You've sold it for 3,25,000. So that is your sales. And now you've not bought this land, you've converted it. So what is the cost? The cost is the FMV, guys. The FMV will be used twice, that is 3 lakh. So your PGBP is 25,000. So here is it, 25,000 and 79,083, two numbers that will get you your marks. Next guys, this Harsha kind thing is also very similar. This I'm not doing right now, I'm not even highlighted it, because guys here also Harsha purchased the land and then she converted it. She started a real estate business, so she converted it into stock and then she constructed something. So here also there is section 45(2). Here also there is two things, one is capital gain, one is PGBP. Capital gain, this land when it's converted 80 SCP, you will use the fair market value. This is the cost. There will be a fair market value. The fair market value is 210 lakhs. So capital gain you will get to know, and PGBP is whenever you sell the stock, but only in this case she constructed 15 flats and she sold only 10 flats. So basically she has only sold 10 out of 15. So basically PGBP will only be for 2/3 or 10 out of 15 flats, and capital gain will also be only 2/3 because only 2/3 is sold. So when will the balance 1/3 capital gain be taxed? In the year when the other 5 flats are sold. So just trying to tell you, what will you do? You will do 80 SCP. You will have an asset which is land, you have a transfer, you have a sale consideration which is FMV, you have a cost which will index maybe, and there is a period of holding. And whatever capital gain, if let's say the capital gain is 9 crores, you will tax this year only 2/3. Why? Because only 2/3 of the flats are sold. And in your PGBP you will have cost of land, which is basically your FMV, 2/3 of that. You will have cost of construction of those 10 flats, that will be your cost. And you will have sale price of those 10 flats, that will be your sale price, and that's how you'll get your PGBP. Guys, remember this entire calculation will only be for 2/3 of the flats because only 10 flats are being sold out of 15. So what about the remaining 5 flats? Whenever the 5 flats are sold, whichever year, PGBP will also be taxed on the 5 flats, and capital gain also 1/3 will be taxed in that year. I'm not marked it because it's a very simple question. Now going to the next one, guys. This is the 4th question. Very interesting question here. Over to y'all. Please read. Very conceptual, good question. First y'all try and then we will discuss. Alright, so let's do this very conceptual question, guys. Mr. A is an individual carrying on business. So guys, if you're carrying on business, you have business assets. His stock and machinery were damaged and destroyed in a fire accident. The value of the stock lost, total damaged, was 6,50,000. Guys, this will be only and only a business loss. So this 6,50,000 is a business loss, 6.5 lakhs. Certain portion of the machinery could be salvaged. The opening block was 10,80,000. So machinery is basically a business asset, and you know guys, business asset, you have a block. So whatever money comes from the insurance compensation for the damaged machinery, you will minus from the block. Yes. So here let's read ahead. So there are three assets. One is stock, which got destroyed. One is machine, which got destroyed. And last, guys, during the process of safeguarding the machinery and in the firefighting operation, Mr. A lost his gold chain and a diamond ring which we had purchased. So this is his personal asset. Yes, this is his personal asset. But are personal assets in the definition of assets? Yes, sad jaw is. So his jewelry and diamond ring and gold chain are also assets. Yes. The market value of these two items as on the date of fire was 1,80,000. Guys, don't worry with all these details. It's very simple. First, stock was destroyed for 6,50,000. So stock was destroyed for 6,50,000. But you got from the insurance company for your stock, you got 4,80,000. So from insurance company, you got 4,80,000. So what is the total loss? 6,50,000 minus 4,80,000. Your business loss is 1,70,000. Is this my business loss? Yes, this is my loss from PGB. Why? Because it's stock. For machinery, the machine's WDV was 10,80,000. And you got 6 lakh rupees from it. Certain portion of the machinery could be salvaged. The opening balance of the block is 10,80,000. You got 6 lakh. So I'll minus 6 lakh. And is there some machinery that is still left? Yes. So can I continue depreciation? Yes, I will continue depreciation on 4,80,000. Yes. And now guys, the main thing is your personal asset. Is it extinguished or destroyed? Yes. ATSCP. Guys, is the gold chain and is the diamond ring an asset? Is in the definition of asset? Yes. Is there a transfer? No, I did not transfer it, but extinguishment or destruction is also transfer. What is the sale consideration? How much did you get, guys? You got 1,80,000 for it. Yes, so that is the sale consideration, 1,80,000. What is your cost? The cost, guys, of this, not the FMV, the cost is 1,20,000. And when was it purchased, guys? It was purchased many years back in 2004. So can I index it? Yes, you can also index it. They've not given us CIIs because they've only asked us to comment and not to solve, but I'm solving it for you. This, can you index? Yes, I can index. And guys, this is your answer. I'll just show it to you. Compensation towards loss of stock. It is basically a loss to be assessed under PGBP. This 4,80,000, if you assume that the machine is left, you can continue depreciation. If you assume the machine is completely destroyed, then you can claim this as a loss, short term, always short term capital loss. And this gold chain and diamond ring is basically an asset under 214, and hence you will have to compute the capital gains by indexing the cost of acquisition. We don't know the indexation numbers, so you'll have to index it. Yes, that's the concept. Yes, that's the concept. Guys, question number 5 remaining. We have 6, we have 7. Yes, 5, 6, 7. Let's finish this and then let's take a break, guys. I know it's been a while, 1 hour and 15 minutes, but let's finish this and then let's take a break. The 5th question on the screen, please. Mr. Sarthak entered into an agreement with Mr. Jaikumar to sell his residential house located at Kanpur on the 16th of August 2021, that is in this year 21-22, yes, for 1 crore 50 lakhs. Guys, whenever you're trying to sell, does it matter when you got the money? No, it is always taxed in the year of transfer. The year of transfer is 21-22. Look how they're trying to confuse you. 20% of the amount was paid by a bank draft on the date of agreement. 60% were paid on possession and balance after that. This is only to confuse you. Don't worry. If the transfer has happened on this year, then this is the year you will do 80 SCP. Anyways, you know the sale price is 1 crore 50 lakhs. Let's move ahead. Mr. Jaykumar was handed over the possession of the property on 15 December and the registration process was completed on 14 Jan. He paid the sale proceeds as per the sale agreement. So guys, ATSCP, is there an asset which is being sold? Yes. What is the asset? It is a normal asset, residential house. Remember, exemption also you can get, guys. Is there a transfer? Is there a sale? Yes. What is the sale price? 1.5 crore. But guys, will you check the sale price against the stamp duty value? Yes. Which stamp duty value you will take? Will you take on the date of transfer or the date of agreement? Or will you take on the date of registration? You may take this lower one as long as some amount has been paid by other than cash. So let's see how has they paid the amount. 20% has been paid on the date of agreement through account pay check. So can I take 1.7? Yes, I can take 1.7 crores. So 1 crore 50 into 110% is 1 crore 65 lakhs. I am not meeting the stamp duty value. So unfortunately, my sale consideration will be my stamp duty value, that is 1.7 crores. How much did you buy this house for? Mr. Sarthak had acquired the house for 30 lakhs, so that is your cost. And when did he acquire it? In 2001. So is there long? Yes. Can I index it? Yes, I can index it. Guys, this will basically be your long-term capital gain calculation. Here I'll show you the calculation. The long-term capital gain is 74 lakh 90,000. Now, do you want to pay tax on 74 lakh 90? No, I don't want to pay. So let's see the exemption. After recovering the sale proceeds from Jaykumar, he purchased 2 residential house properties. Can he buy 2? Yes, he can buy 2 because your long-term capital gain is up to 2 crores. One in Kanpur for 20 lakh and one in Delhi for 35 lakh. Guys, make sure you're buying it within 2 years. This is also the same next year. This is also the next year. So no problem, within 2 years, 20 and 35. So can I minus it under section 54? Yes, because you're an individual. The house that you sold is a residential house property long term. So you can minus 55 lakhs. And the remaining, I will have to pay tax. Yes, at what rate? You've sold a long term asset. So 20%. That is the answer, guys. So how will you start this? We will do sums when we do exam questions, but this is computation of income chargeable under the head capital gain. All this will come in a working note, because imagine if you write all this in a table, it will look very shabby in the exam. So hence all this will go in a working note. So you will compare 1.5 to 1.7 and you will take 1.7. Then you will minus the index cost of acquisition and you will get the capital gain, and then you will get exemption under section 54. Perfect. So guys, next is question number 6. Mrs. Yuvika bought a vacant land for 80 lakhs in 2004. So she basically bought a land. I'm going to do this on the next page, but remember guys, she bought a land in 2004 for 80 lakh. Registration other expenses were 10%. So totally it becomes 88 lakhs. That was the cost of land in 2004. She constructed a residential building on the said for 1 crore during the year 6-7. So these are two different assets. Yes, she bought a land and then she constructed a building. On the building, she constructed for 1 crore in the year 2006-7. So on the next page, I'm going to write land here and I'm going to write building here. ATSCP and ATSCP. Let's see details, guys, slowly. She entered into an agreement for sale of the above said residential house with Mr. Johar, not a relative, in April 2015, that is after 1st of April 2014. The sale consideration was fixed at 700 lakhs, that is 7 crores, And on 24th April 2015, Mrs. Yuvika received 20 lakhs as an advance, auspicious amount, yes, auspicious amount in cash by executing an agreement. However, due to failure on the part of Mr. Johar, the said negotiation could not materialize and hence the said amount was forfeited by Mrs. Yuvika. So guys, this amount was forfeited. Yes, this amount was forfeited. So this 20 lakhs forfeiture will be taxable, yes, in the hands of Miss Yuvika. Yes, in which head? IFOS. Yes, into the head IFOS. I hope it's better now, guys. Is it better now? No. Okay, guys, what I will do is just 1 second. Better now, guys. Is it better now? Okay, slightly strange because 1 second.